All right, now a little switching topics here. I'm going to say the Trumpian economy can be a new city on the hill. That's the subject of the riff. The so-called affordability crisis is nearly overshadowing massive Wall Street betting on whether the Fed will cut its target rate a quarter of a point at its next meeting, December 9th and 10th. Some of these Fed heads have been mouthing off about inflation and buying into the lefty media's attack on President Trump. In the last few trading sessions, investors have been selling because they think there'll be no rate cut. I think that's baloney. First of all, grocery prices under Mr. Trump have barely budged despite a couple of highly publicized outliers. Overall, grocery prices are up only 2.1% at an annual rate. The grocery problem guy was Joe Biden, where grocery prices jumped 5.4% annually. Now, cumulatively for the whole period, grocery prices under Joe Biden were up 23%. And in Mr. Trump's first 8 months, they were up only 1.4%. Okay, in general, inflation is coming down. And that according to Fed Governor Chris Waller, an influential voice on the board. Now, Waller's also worried about some recession creep in the job market, and he is advocating a 1/4 point reduction at the next meeting. Now, of course, Democrats sabotaged Trump's fourth quarter with a 43-day shutdown. That's going to take money out of Q4, though it will be recouped next year. Now, look, think of it this way. The way to keep inflation down, first, shrink the Fed's balance sheet, reduce their target rates, leave the M2 money supply growing at a modest 4 or 5%. That's what it's doing. Second, supply-side tax cuts and deregulation. And drill, baby, drill, produce more goods, more energy at lower prices. Third, get rid of non-essential tariffs like coffee, bananas, fruit, meat, nuts, other stuff. You know, stick to the big stuff, the important stuff, the national security stuff. Forget about stuff we don't really grow much of. So, fortunately, Mr. Trump just did this, and the results are immediately positive. Meanwhile, I want to add to this, forward profit estimates, profits are the mother's milk of stocks, okay? Forward profit estimates for next year are up a whopping 12% for the S&P 500. And that's why folks should be buying the dip. And as Mr. Trump said yesterday, indeed, some grocery prices are already falling. He's right about that. I'm telling you, folks, you're going to wake up sometime very early next year with an economy growing around 4%, an inflation rate below 2%, historically mild interest rates. Last time I saw that was Ronald Reagan's city on a hill. And that's the riff. All right.